Hi everybody, Alex Aploy here from Expert Forex, and in today's video we're going to be talking about using a portfolio approach to finding the best Forex trading techniques or the best Forex EAs. So the one big advantage to using portfolios is that you spread your risk. Now it's a well-known fact that investors avoid putting all their eggs in one basket. That's a very old investment technique. And what that means is that they don't put all their faith in one stock or one currency or one particular investment. They don't put it all in one account or risk their whole financial future on one Forex robot. They spread the risk by using a portfolio approach. I'm going to show you one aspect of the portfolio approach, and then we'll discuss the other aspect of the portfolio approach. Now, in our Forex Trading Setups forum, we are currently running 5 strategies trading the grid trend multiplier. And why are we doing that? We want to see the results of using different strategies on different currencies and different settings, and that way we learn which ones are the good ones and which ones we need to drop for the future. And that's part of the portfolio approach. Don't test one set of settings or only trade one set of settings. Trade a wide range of them so that you can find out what works and what doesn't work. So I'm going to just take you through some of these settings. Now this trader started with $10,000 and has made almost $1,860 from his trading so far on his $10,000. He's trading the Euro USD and he's trading a 15 pip grid size with a lot size of 0.4, and all of that I'll explain a little bit later, but you can see that the gains have been very good using this particular strategy. So let's move on to the next one. Now this strategy is slightly different. It trades the USD CAD and it's favoring the buy direction, so it's putting more lots into the buy direction and fewer lots into the sell direction, and it's trading a grid size of about 10 pips. Now it's currently making a small loss of $85 on the $5,000 account, so it's not a major loss, but obviously not as good as the first one that we looked at. Now this option trades the Euro franc. So let's have a look at the next strategy. Now this option trades a very aggressive grid size, and the grid size is 8 pips. And to compensate for this very high risk on grid sizing, the lot sizing is very, very low, 0.02 of a lot per trade. Now you can see from these results that this strategy isn't working all that well. The lot sizing is too low, and potentially the grid sizing is also too low. But let's move on to the next strategy. Now this strategy is doing a lot better. It's almost made $2,000, and it is using a larger gap size, trading the Euro franc, but also a much bigger lot size. So now we're starting to get a feel that the bigger gap size and the bigger lot size is most probably the better way to go here. And then finally, let's have a look at the last one. Now the last one isn't doing too well. It's made a loss of $1,700. I have warned people not to trade this. This is an experimental one, because in this one we used very, very aggressive lot sizing and we use very, very aggressive grid sizing, and clearly that strategy is not the way to go. So failures have a huge benefit because they tell us what not to do, and then the successes that we've looked at today show us what we should be doing. And the market is like that. It teaches you how it wants to be traded. So let's have a look at the overall result. Now this is where the portfolio approach comes in. We've got a portfolio of 5 trading strategies that we've used for the GTM. Clearly some are very bad, some are mediocre, and others are very good. Now the thing to do is to take out the bad ones out of your portfolio and replace them with others. And you can see below the schedule there are 5 strategies waiting to be traded on Monday. So In total, there will be most probably 9 to 10 strategies being traded, and we will continuously be taking out the bad strategies and leaving the good ones in and adding more strategies so that we can, in the end up with a lot of good strategies that are robust, and we know what doesn't work and we know what does work. Now, that's using the portfolio approach of testing strategies on one particular EA, which is the grid trend multiplier EA. Now, before we move off this slide, I just want to go through the results in a little bit more detail for those who are owners of the grid trend multiplier and would like to have a closer look at these particular results. Now, if we go through these results and we look at the failure at the bottom here, the gap size is way too small for grid trend multiplier trading, and the lot size has been way too big considering the huge risk you're taking by having a small gap size. So the lesson here is don't risk on both sides. Don't have a very aggressive gap size and a very aggressive lot size at the same time. And again, remember, this was an experimental one, and an educational one is specifically put in to make that particular point. Then if we look at the most successful one, we see the opposite. We see a grid size of 20, which is a lot higher than the 7, and we see a lot size which is only 0.1 of a lot compared to that lot sizing. So you can see completely the opposite, a conservative grid size and a conservative lot size, and yet it has made the best return out of all of them. If we look at the others, then here we've got an aggressive grid size, but a very low lot size, which hasn't really made money. So you need to getting the balance between grid size and lot size is quite critical, and here obviously we got a much better balance than the one above. And then here we have one where the buy direction was 0.04 lots and the sell direction was 0.02. Again, you can see just by the lot sizing they're out of line with a successful one, and also maybe sometimes it's not good to try to be too clever and rather balance the buys and the sells and let the multiplier add value by the price visiting the same grid level over and over again. And then lastly here again we have a nice successful one over here. Again, a grid size that's not too small. This is still fairly aggressive but not too small, and then a lot size that is a little bit aggressive, and fortunately the euro has been trading sideways for a while. I would say this one should be cashed in right now to eliminate any future risk on this particular EA. And then just a note to grid trend multiplier owners, please post your strategies on the forum. Let's follow them whether they are good or bad, and let's learn from them so that all the owners of the grid trend multiplier can get a good feel of what works and what doesn't work. Now, as you can see, the grid trend multiplier is such a simple EA because there's only two critical things you've got to get right. You've got to get the gap size and the lot size right. That's all. That's the only combination you need to get right if you are trading in a dual direction. In other words, you're buying and selling at the same time. So that's what makes this EA so attractive to total beginners and experienced traders, in that it is so simple. Just got to get that balance right and you're away. The more volatile the currency, the bigger gap size you need and a reasonable lot size. The less volatile the currency, the smaller the gap size, and you can then go with bigger lot sizes. But now if you do the same thing with, let's say, 4 or 5 other strategies or EAs, you have a number of accounts running, you're continuously cleaning your portfolios up by keeping the good ones and letting the bad ones go. You reach a point where let's say you have 4 or 5 portfolios where the cream has come to the top in those particular portfolios, but then you can start treating the 4 or 5 portfolios as part of your portfolio, and you can also look and say, oh, in total, I don't want to trade this EA at all. And you can dump that EA and you can replace it with something else, or you can replace it with 2 other EAs that you test in the same way. So the portfolio approach is very good for testing, but also for live trading. Never put all your eggs in one basket or one account or one Forex robot. Have a range of them that you're continuously trading on a demo or a live account basis, and continuously filtering the bad out and putting the good in. There's so many benefits to this approach because you are continuously learning how the market wants to be traded using your particular EA or your particular Forex trading technique. Now, I hope I've given you some ideas on how to approach your Forex trading. You cannot put all your eggs in one basket and only trade one account and one technique or one robot. There are so many demo accounts available in the Forex market. Just open as many as you want and test as many EAs and as many techniques as you can, and use this portfolio approach to continuously let the cream rise to the top and eliminate all the results that you don't want. So for me, Alex Employee, cheerio. Thanks for watching this video. If you've liked it, please give it a like. If you haven't subscribed yet, subscribe and click the bell. But most importantly, share this video. You can do this in many ways. Message your friends, send them emails, or share it on social media, on Facebook, on Twitter, and those kind of places. So from me, Alex Employee, cheerio.